Good day, everyone. This is Patrick from UsdJpy Code Trading System, and it's Saturday, the 25th of June, 2022, and it is the weekly technical analysis for the spot gold and dollar yen for the 5th week of June and the final week for the month and half the year as well. Let's begin with spot gold. And I did cover the other major pairs as well for the euro, cable, and Aussie dollar, where it was basically just consolidation last week. And similarly for spot gold as well, although the range is slightly wider with about almost 300 pips range. But mainly it was operating within this candle here, this candle range, just the previous Thursday, and slowly drifting lower below this 21 pip retracement, just below that. Close that for the week in this lower part, and we'll see if it's able to break out from this this box here for next week, but at the moment it's unlikely, although there are US news every day for next week, but no major one except perhaps the PCE price index. So we'll see if there's any impact from there. So clear this first. So this interim support, I think we'll remove this now and perhaps move this to this upper range, which will be resistance, because there's a confluence of the daily 200 and the daily 55 EMA coming together, as well as this round figure at 1850. Which has been restricting any breakout higher, and support is still at the 1800, although it did not touch that level last week, but it's slowly drifting lower. And if we take a look on the weekly time frame, you can see it's operating in this lower wick of the previous week, and under the weekly 55 EMA. So we'll see if there's any possibility of retest of this support and end up still within the range for next week. So it's hard to see any trigger for a breakout either way. On the monthly candle, it's smaller range than the previous month, and it's either going to be a spinning top or doji if it stays around this level at the 21 pip. Okay, so let's see if it's able to break out from this box here next week. So at the moment, it's a constraint in this about 400 pip range if it does break out higher. All right. So unfortunately, it's quite a dull trading week last week, although there was some cases where it did dip lower on Thursday. After some consolidation. So there was some activity, but quite constrained. And we'll see if that's the same with the US dollar index, the DXY. Let's switch over and take a look at that as well. So here's the DXY, US dollar index, and it has also been consolidating back inside just one candle from the previous Friday. So well inside this range here. And although it has a slightly bearish tilt for the week, it's still sitting around the 104 and this previous swing high area, which aligns with the 62 pip, which is actually a 38 pip retracement back down. That's at the 103.84 area. So yeah, no major change, and it's just consolidating in this area here. Fairly tight range. So it will need to try to break out next week and attempt to either test the support level at the 50 pip here, and if it bounces back up, it's going to test the 105 again, but most likely it's going to end up neutral for the week and likely for, let's take a look at the weekly time frame. And from the previous week, also a long-legged, almost a doji, spinning top. It's operating in a lower half of the candle range. And if we go to the monthly candle, it's still has a bullish body with a longer wick on the top, and we'll see how far the price will drop down. There is definitely strong support at the 50 pip retracement of this range here. Which is basically from the start of the month. So it's still in the upper half of the month, and if it settles at the 50 pip, then yes, then there'll be a upper wick, which is about half the range. All right. So yes, unfortunately, just consolidating. And key support is still low. We may be able to raise this up now to the 162 pip extension of this move up. 50 pip is still the interim support. major resistance still at 105. Okay, so with a lot of minor news coming up in the final week of the month, it's hard to see any major or significant breakouts yet. Okay, let's move back to the other major pairs. All right, let's move ahead with the dollar against Japanese yen, and also after attempting to break out higher above the 138 fib extension, it could not progress further to the 162 fib and then fell back, especially on the Thursday, and fell back into the 135 round figure, and right at this interim resistance again with this previous swing high. The only thing is that it was operating higher than the previous week and did not test the support level at all. So if we take a look at the weekly time frame, it did try to sneak above the previous week's high, but then came back to settle near the close of the previous week as well. But it was not able to advance further, so not sure whether there's signs of slowing down and some momentum loss. On the monthly time frame, it's still operating in a very high range of the monthly candle. So we're just waiting to see where the close is going to be next week, whether it's going to still sit above the 135 round figure. Let me just add a more round figure here at the 137. They did almost reach that last week, but only managed to get up to 136.70 before turning lower. Right, so this is still interim resistance because from the way back here, previous highs from 20 years ago. Okay, so it's settling around there. Support is still safe at the 133 and major support below that. Okay, let's see if it's able to break out higher to test the 137 or even slightly higher to reach the 162 fib extension. Otherwise, it's likely to just consolidate for next week as well. All right. So for the range for last week, basically was operating within this box here of about a range of 240 pips, still quite a healthy range, especially fall on Thursday, which dragged the rest of the yen crosses lower as well. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.